The exact same problems yesterday. I don't know what caused them, why they happened, what was going on. Boaz came in the room yesterday. He had the exact same issue. He got with Jason yesterday, and that was the fix. Jason's like, it's weird. You got to go back 8 days. If you remember, I don't know if you use market flow charts, but market flow charts used to do that too, where every now and then, close my door. Every now and then the data would be weird, and if you changed it to 9 or 11 days, it came through beautifully. I don't know if it's a tick data corruption. I have no idea the whys, but that was the fix. I'm still happy to email you a template, but mine's going to be the same as anyone other. I did the same thing to my buddy. I mean, I did everything you did. And it was the 8 days that fixed it. It's kind of crazy. Crazy, crazy. All right. Good morning, Jeffrey and Ron and Joel. Good to see you guys. I love it when the room's active and you guys are awake and ready to have some fun. Erla's here. Good morning, Erla. Um, Leah Tempest. That's a new name. Welcome to the room, Leah Tempest. Great to have you in here. Hey, Jerry. Good to see you. I love it. We got all the cool kids hanging out again today. Guys, it's Friday. I was up late. If I seem sleepy, I apologize. Good morning, Marky Mark. I'm going to sip coffee while we teach. Good morning, Better Dad. Um, Better Dad's sitting in there and it's 4 in the morning. He's like, what are you talking about, sleepy? Um, Guys, let's get going. Let's do it. Jerry, what a great way to start the class. I took yesterday to trade a little, and all I can say is the rules work. Amen. Jerry, you get the microphone today. You're teaching class. Isn't it crazy that the rules work? But guys, I'm going to tell you right now, there's going to be a point in your life where you're just not sure. There's going to be a point in your life where you say, this is too simple. These aren't enough rules. This can't be enough charts. These aren't enough indicators. And you're going to try to find everything beyond the basics. And then we all have this realization that trend trading works. It was kind of funny. So yesterday, John Novak's working on this automation thing. And all it is a trend trade. I mean, it is nothing but a trend trade. And I don't know if you guys can see that. That's my day yesterday on a 2-lot. Nothing but a trend trade. Little over $5,000 using one chart, odds favorable momentum. And it was crazy. And John's been doing this every day. And I'm like, well, let me test, because we're testing things, right? And all it is a trend trade. It's odds favorable momentum and a clear path, and go. What, the high probability trend trade, Better Dad, or the automated system that he's doing? His automation is a side product. Absolutely not. Nexgen doesn't sell automated systems. Because automated systems fail in time. They almost always do. But Better Dad, I'm giving you one better. We're teaching you to fish. And even though it's the recipe that he's trying to automate, that's like a side project, right? Like you have your car that you drive to work, but there's a hot rod in the garage. This is John's hot rod. It's something to tinker on to keep his brain active. And I was like, well, I'm just going to do it. And all it is, it's literally momentum, path, and entry. That's it. It's freaking amazing because it's what you guys do every day. The numbers were so high because it's NASDAQ, because there's a lot more trades. So anyway, hey, good morning, Roy. Let's get going. Forexfactory.com. I like the days where all the talking slows us down, because usually we end up talking about important stuff. One of the important things to talk about is news. How was that for a segue? Every day, go to forexfactory.com/calendar. When my charts are loading, or when they start to load, they just don't take long. I go to forexfactory.com/calendar, and I look for these red boxes. I look for the high impact news. Today at 10 a.m., we've got the University of Michigan Consumer Sentiment and Inflation Expectations, which means at 10 a.m., somebody may go absolutely nuts and dump a metric ton of money into the market. It might be too tradable to fast, or too fast to trade, excuse me. It may spike and bounce and do all sorts of craziness that affects our patterns. So one thing I do every morning is when I check news, I just commit to not being in the market at 10 a.m. I commit to being out of any position 3 or 4 minutes before, and I commit to not re-entering a position until the market is moving at a pace that I can trace, that I can trade, that I'm comfortable with. So that's every morning. We go there and we check that out. So put a note on your monitor, guys. 10 a.m. High impact news. And then everything that I talk about comes from the Nexgen page, specifically the trading guide. This is where all the answers are. And the answers are just the rules. And the rules are for one trade that we talk about every day. We talk about a high probability trend trade, guys. We talk about a trade that typically wins 70 to 80% of the time. We talk about a trade that creates confidence through that memory of success. That's one of my favorite phrases, is the memory of success is what breeds confidence. And Jerry, you probably experienced it yesterday. When you slowed down, when you followed the rules, when you took the trade, by the end of the day, you're like, man, I can do this. I can do this without all the distractions, without all of the misconceptions. All I have to do is follow the plan. And I love that, Jerry, because that's what I try to impart on you guys every day, is that being a day trader, making a lot of money, having the potential to completely change your life doesn't have to be difficult. It has to be consistent. So we're going to focus on chart reading. We're going to use this high probability trend trade, and that's going to be our goal this morning. Because 90% of your day is just reading indicators. 90% of your day is doing nothing. I woke up late today, but I didn't get a trade today. So I haven't pulled the trigger yet. 90% is waiting, reading your indicators, waiting for advantages. And then when those advantages are present, using the momentum and the potential to break and the area inside and knowing where your stop goes and making money. Amen. So Lonnie, welcome to Nexgen. You have those trades that you can do what you want, and then Nexgen trades work. Amen. Lonnie, beautiful. So the only thing I need you to write on here is that you had the potential to break. You weren't quite broken, so you might need to manage a little bit. And the fact that you jumped out of this one with the loss of momentum is beautiful. The entry is perfect. The stop is amazing, and you got paid. Lonnie, welcome to Nexgen. 2 or 3 days in, and you're already there. I love that. So let's get back to where we're going. I wanted to take a moment to look at yours, Lonnie, because yesterday you left before I could give you feedback on yesterday's. I apologize for that. You're welcome to post that one again today. And then, guys, I want to remind you, if you ever want me to look at your charts before you have to leave for work or an engagement or whatever, let me know. I always will. But we're going to focus on chart reading this morning. Same as we did yesterday, same as we'll do on Monday. Because 90% of your day, guys, if it's a 6-hour trading day, 36 minutes of it might be active trading. The rest of it is waiting for advantages. But if you really embrace the idea that it's advantages that get you into the market, that it's a pattern that's been proven to win more than it loses, that gets you into the market. Good morning, Marky Mark. I missed that one. I apologize. What happens is you create this patience, this waiting, almost an insistence that your pattern be met. Because when you begin to learn to read your indicators, you're going to understand where the market is likely to continue. You're going to use this for an entry point for your high probability trend trades. You're going to understand where the market is likely to go. It's going to help you hold those trades a little longer if the indicators are telling you it's okay, and you'll understand where those profit targets need to be. And then finally, you'll understand where the market is likely to stop. We call these termination conditions, and termination conditions can absolutely halt the forward progress of the market, and you're going to know about them long before you get to them, and you're going to be able to make good decisions not to trade into them, and you're going to make your decisions based on only 3 rules. One of my favorite phone calls in the history of teaching this classroom was a gentleman that told me, Mark, there's absolutely no way 3 rules is enough rules. There's absolutely no way 2 charts is enough charts. This can't work. Which I love. I love it when people come at me with that approach, and I hope that you'll do the work to prove me wrong, because we'll be hanging out for a while if you do. As these 3 rules are the high probability trend trade. The way it's taught in this room in the first hour, this is the best of the best way to take this trend trade with the highest chance of winning. And that's what I focus on in the first hour, because this is for new users. We're creating confidence. Each rule, when it's true, provides an advantage. So rule number 1 gives the advantage of momentum. Rule number 2 gives the advantage of a clear path. Rule number 3 defines your entry area. That's your advantage, getting in where the market is most likely to continue. What I want you guys to start on day 1 is when you look at your charts, I want you to say out loud, I have momentum. Good morning, Miss Trina. Or I don't have momentum. Because it's the advantages that create the trade, guys. And if you can look at your chart and say yes or no, you know whether or not you should be taking a trade. These 3 rules happen on only 2 charts. 66% of your advantages come from a large chart. This large chart's a very slow-moving chart. It's a very broad stroke of a brush. It really kind of shows the overall opinion of the market. And the large chart, via the first bar, is going to define direction, momentum, and areas. Rules 1 and 2, those first 2 advantages, momentum and a clear path, come from a large chart. And you brand new users and you older users coming back, I want you to focus on understanding and committing to momentum and path, because once you have these 2, it's amazing. It opens doors. You begin to see more. You begin to do more. You begin to find more opportunities. And when you have the first 2 rules met, that's when you're going to go to a smaller chart. And this is a refinement chart. It takes that 1 bar, and you see 20 to 30 bars on the smaller chart. So you're going to see fluctuations from the top of the bar to the bottom of the bar on the large chart. And on your smaller chart, it looks like a big retracement and a bounce when the rules are met. So we're refining and taking an x-ray of that big bar. And by doing so, rule number 3 is going to pinpoint the area right where the market is most likely to continue. This becomes the entry, and it does reduce risk, and it will increase profit potential. But rule number 3 should only be explored when rules 1 and 2 are already in place for the brand new user. And we use these 2 charts, and I love this metaphor. Who are you trading with? And who are you trading against, guys? The large chart is the big crowd. These are the people with the power and the influence, and they create trends, and they build that momentum, and they react at key areas on your large chart. And the large crowd leads the way, and they typically win. And the high probability trend trade is designed for you to capitalize on the advantages that the large chart creates. The small crowd, this is your entry crowd. These folks still have an awful lot of money, but they fight. When the large crowd says up, they want to go down. And when the large crowd says down, they want to go up. And the small crowd, man, they put in a good fight. They really do. They create these retracements, these little pullbacks. And they fail, typically 70 to 80% of the time, which means that when you use rule number 3 to define where they're most likely to fail, which is the place where the market is most likely to bounce and continue with everything the large crowd wants, guys, you have the potential to win up to 70 to 80% of the time. I think my win percentage yesterday was right around 73%. but my average winner was twice as big as my average loser, which made it really easy to take profits. So 2 charts and 3 rules. I really want you guys to keep it simple. Don't overthink it. Let it be easy. All the things I can say to remind you that Nexgen has put 28 years into teaching people to day trade. And I'm not as smart as the guy that created this, so I have given you the path of least resistance to success. It's going to be up to you whether or not you choose to follow it. And there is a clearly defined path. Post in this room, guys. Show me everything that you do. Tell me why you did it, because it's the whys that create repeatability. And track everything. Take 1,000,000 pictures. So we're going to take an hour or so, give or take, and we're going to learn the Fibonacci rules and trigger line rules for when it's okay to trade. It's okay to trade when the rules are met. It's not okay to trade when the rules are not met. I'm not telling you what to do, but if you adopt that approach from day one, it's going to keep you out of a lot of unnecessary, avoidable losses. You guys simulate. I want you to practice. I want you to take trades. I want you to pull the trigger, move stops, get in, get out, do all the things. And I want you to make 1,000,000 mistakes in your first couple weeks, because we're on simulator, guys. But I want you to post these pictures in the room. I want you to talk about everything that you saw. I want you to go back to those 3 basic concepts. I want you to define the momentum. And I want you to define your path. And I want you to show me where you entered and tell me why. Because what happens is my job is to teach you to read indicators. So I need to know what you see, what you saw, what you felt, what you were thinking when you get into the trade. And anything that can be done better, anything that can be done with less risk, with more profit, we'll talk about it. Anything that may be robbing success from you, we'll talk about it. And we'll talk about a way to fix it. So you're going to show me your read, and you're going to tell me the whys. And the great thing is when you tell me the whys, and I'm like, man, Lonnie, this is beautiful, great trade, awesome, everything is perfect, your whys become the recipe to taking these perfect trades. And your whys will also be a recipe for avoidable losses, to not take those trades when the advantages aren't there. So every time you post in my room, it's a private session with me. It's just the 2 of us in front of a crowd of silent people, and we're talking about everything, guys. Take advantage of that. We do it 15 hours live every week. And we're going to simplify. I will give you guys a trading plan this morning. I'll give you everything that you need to be successful with this software as a brand new user. And the plan I give you is very, very focused. It's the high probability trend trade. On that same plan is a medium probability trade, and that's a trade where you won't quite have the clear path, but I'm going to give you the best of the best way to take it. Your job is going to be to know what looks you'll commit to, because rules are a description of a pattern, and that pattern has to be proven to win more than it loses. That's how rules come into effect. So you've got to learn those looks so they're easy. That's the second piece of the puzzle, guys. Posting in the room. And I think almost more importantly, posting in your spreadsheet. The people that take the most pictures typically get to where they want to be the fastest. It's easy to believe that, oh, I'll become a better trader if I just keep taking trades. Guys, take pictures. There's a reason that the PGA Tour players hit 1,000 balls a day. There's no money to be won. There's no glory in the driving range, guys, but that's what sets them up to make that money, to have that glory. So take a lot of pictures. And this first tab on the spreadsheet I'm giving you, as this is just the rules. Those are those first 2 advantages, the core of your education. Strong triggers and clear path, exactly what it looks like, exactly how to describe it, the whys, so that it becomes repeatable. And then the opposite, when those rules aren't met, which is your big indication, I shouldn't be in a trade with weak triggers. My rules say strong. And I shouldn't trade into a termination condition. My rules say clear path. The second tab is where I steal from you guys. Not proud of it, but it's what I do. Every time you post something great in the room, a high probability trend trade, a well executed medium probability trade, guys, I steal it if the chart's annotated. If there's a great lesson on there for the traders coming in behind you, you'll see that there's, I don't know, I think over 400 pictures of you guys just being awesome. So this weekend, if you're new, go scroll through those, look at them, and you'll see that it's the same darn patterns over and over. In the blue section, it's how to define your entry for the high probability trend trade. A little bit on the NASDAQ, guys. I don't make recommendations at all, but the NASDAQ moves 10 times faster, is more unpredictable, overruns areas. The NASDAQ is not a beginner market. Crude oil and the S&P are some of the easiest ones. Better Dad's starting to get a couple people hooked on copper, which I think is interesting. There's ideas on management. This is the most basic one. This is from the plan I'll give you. And guys, there's always a reason to do something else. There's always a chart reading that allows you to hold for bigger moves or maybe get out sooner. So there's some ideas on management there. And then the cool thing is the more you see, if that makes sense. The more you learn to read your indicators, the more patterns just jump off the page at you. So here's a lot of the patterns that I recognize every day. And then you'll go to the build your plan section and you'll start filling it with your pictures. I encourage new users 15 pictures a day. If you take 15 pictures, if you annotate 15 pictures, you're collecting over 300 pictures a month, guys. And after 90 days of study, hey, good morning, Bob, me too. After 90 days of study, you're gonna have almost 1,000 pictures. I love to show my count. I'm over 1,600 pictures for 2025. If anyone was in here yesterday, I was at 1,559 to give you just an idea of how many pictures I take. So in the last year, I'm right under 10 grand. Take a lot of pictures, post them in the room, make sure your chart reads are good. And then finally, track everything. Every time you take a trade. So Trina just took a trade. She posted in the room and she says, Mark, I need feedback. And she's going to get all the feedback she could ever hope for in the second hour. And then her job is to go to her spreadsheet, to paste it in there. Turn it into a hyperlink, make it easy to read. And the instructions are in the spreadsheet to teach you how to post in the spreadsheet. And Trina's going to say, man, I had momentum and my path was amazing. And Mark said, whoop, I don't know why I put M. But Mark said, I entered on the wrong side. Loser, right? Not she's a loser, but the trade was a loser. And it's this feedback. Trina's going to wake up Monday morning and look at this picture and she's going to say, this was perfect. I'm going to do that again. And this was amazing. I'm going to repeat that. But my entry needed a little bit of help. Here's the coaching that I got from it. Let me make sure that I can enter better than I did yesterday. And that's perfect. That's exactly what's going to happen, guys. So every day you're going to wake up. Every day, I hope. And you're going to go back and look at yesterday's trades and you're going to say what worked and what didn't work and what felt easy and what felt hard. And you're going to recognize patterns not only in the market but also in yourself. And that's what I do. When you guys post in my room, when you tell me the whys, I'm going to have you figured out. I will literally have you figured out in 5 or 6 pictures. I'll know exactly what we need to work on to correct mistakes. And I will cheerlead for you all day long to make sure that you repeat the things that are bringing you success. So in the next hour, you will have everything that you need to be successful with the software. I'm starting to wake up. We're going to learn the rules. You're going to practice. And you're going to practice without fear. You're going to focus on the process, not the results, because the process brings the results. We're going to keep it super simple. 3 rules, 2 charts. You guys have to learn the looks, so post in the room, fill up that spreadsheet, and guys, let's giddy up. What's on my charts? This is for you new users. Every time you open your workspace, you're going to see triggers. You're going to see small triggers, and you're going to see large triggers. These trigger lines, when they're going up, are green. When they're going down, they're red. You don't need to know the whys. Know the difference between the two. Smalls and large, solid and dashed. You're going to use trigger lines to define rule number 1, that advantage of momentum. You're going to use trigger lines to define termination conditions, rule number 2, And you're going to use these large triggers to define your entries, rule number 3. So know the difference between small and large. That's it. How easy. And then both charts will have areas. And the areas have names, and we're not going to talk about the math that goes into creating them. We're not going to talk about the programmers that did it and what they had for breakfast. We're just going to give them names. There's going to be a divergence high line, which is a magenta line. And there's a divergence low line, which is a cyan blue line. That's a fancy way of saying baby blue. There's red Fibonacci, this is resistance. Blue Fibonacci, this is support. Yellow 1-to-1s, a lot of colors. And then a midband. And guys, on your large chart, these are the areas where the large crowd make decisions. These are the ones that can stop it, that can create bounces. On a small chart, we're going to use these areas to define entries. So just know the names because they do come up in the rules. And now let's get into the rules. Large chart leads the way. Large chart is the big crowd. It defines direction, momentum, and areas. And rule number 1 is defining that advantage of momentum through strong triggers. So I open up my workspace, I look at my large chart, and I notice that the background has a color. Well, most of you notice that the background has a color. If the background is green, it's going up. If the background is red, it's going down. Guys, the highest chance of success is to trade with the trend, not against the trend. To go up when the market's going up, to go down when the market's going down. This is futures. We can make it both directions. It's pretty awesome. I had a kid I was talking to yesterday asked me, he goes, oh man, it must be killing you with the markets down. And I'm like, no, I made $5 grand yesterday going short. It's okay. Guys, down markets don't affect us. It's the ups and the downs that give us opportunity. So when I define the trend, the only way in an uptrend to have strong triggers is if the trigger lines are green, large and small. And in a downtrend, the only way I can have strong triggers is if both triggers are red, large and small. Strong triggers means that the small triggers in an uptrend are above the large triggers, and the large triggers are wide. You want space between these two lines, and it's the gap between small and large. I want you to picture scissors that are open. That gap between small and large lets me know that the odds are favorable for the market to continue up. So every time I see a strong trigger, my instant reaction is odds favorable momentum, OFM. In a downtrend, smalls are below the large. The space created like open scissors lets me know that the odds are favorable for the market to continue down. Odds favorable momentum. You're going to see that annotated on charts, OFM, all day long. Odds favorable momentum can push a market in the direction of the trend. Odds favorable momentum can break key Fibonacci areas. Odds favorable momentum is when I'm using that smaller, faster chart to buy Fibonacci support or sell Fibonacci resistance. It looks like a tail on the large chart. Your refinement process is going to have you pinpointing where the tails are most likely to form based on having that momentum first. And strong triggers, guys, has nothing to do with these price bars. Strong triggers has nothing to do with Fibonacci areas. It's just a comparison. Open scissors, smalls above the large, smalls below the large. And it happens all day long. Crude oil is just kind of being pokey, but check it out. Separation, that's strength. That's only one rule, but that's exactly what it looks like. I'll just go like this. Separation is strength. That's exactly what it looks like every day. So can you guys give me a Y in the room? This is the easiest thing you'll ever do. Separation up, odds favorable momentum. Separation down, odds favorable momentum. Keep it simple. And then when the scissors close, when the smalls return to the large, work their way inside, guys, this is weakness. And when I have weakness, when you have weakness, I want you to say to yourself, anything can happen up or down. A lot of times you'll see it annotated on charts, ACH, anything can happen triggers. That's got to spark this feeling that maybe it's not the best of the best, that maybe you're less likely to push in the direction of the trend. So as a brand new user, commit to momentum, and we're going to avoid the weakness. And I'm going to share this picture. I haven't shared it in a while. Strong triggers pushes down, and then we get those anything can happen, those weak triggers. And I don't even have Fibonacci on this chart. And that's where your reversal comes from. And then it creates odds favorable momentum. There's a potential entry. And then it turns into weakness because momentum goes away, and that's where the reversal happens. And then there's odds favorable and another one of those tails. And then this is the indecision. This is why I mentioned colors. You'll notice that the larger down but the smaller up, and the colors don't match. I don't have rule 1 met. And here, both trigger lines are red but the background is green. I don't have odds favorable momentum. This is a transition. This is where the large crowd buyers and sellers are fighting, where they're trying to win supremacy so one of them can get back to odds favorable. This is where people tend to predict what the market will do rather than wait for their indicators to tell them that the odds are favorable. These looks are avoidable losses. So, hey, good morning, Sid. So keep it easy, keep it focused. And guys, rule number 1 is rule number 1 for a reason. It creates a lot of warm fuzzies. But it's not enough. It takes 2 advantages on the large chart. And the second one will keep you from trading into a termination condition. That's going to give you room to your profit targets. And we're just going to call it a clear path. So what's a termination condition? Well, it's a Fibonacci-based indicator that may reverse the market based on a comparison of the Fibonacci area and the T3 trigger strength and location. Man, that is wordy. What is a termination condition? It has the potential to be one of these horizontal lines on your large chart. They all have names. Divergence highs, red Fibonacci resistance, yellow 1-to-1s. And guys, these areas are where these men and women are making decisions. These areas may stop the market. Buyers can buy and sellers can sell, and fights can happen and reversals can come from them, and sometimes they break, and you'll never know. You'll never know what the reaction's going to be. Lonnie, before you go, let's look at it. Strong triggers? Yep. You got it at 73. You have the potential to break. You take the perfect entry, and it looks like you got paid. Great job, Lonnie. First weekend, he's already nailing these concepts. I love it. Enjoy your weekend. So guys, these areas are where the large crowd makes decisions. So to identify a termination condition, let's let the large crowd get there. And when I say large crowd gets there, all I mean is that your large chart, price bars reach the area. They reach resistance. Resistance can be a red fib. Resistance can be yellow 1-to-1s. Resistance can be a divergence high. The same is true at support. Support can be a blue fib. Support can be yellow 1-to-1. Support can be a divergence low. So when price reaches resistance, all you have to do is ask yourself, where are my triggers? It really is that easy. Where are my triggers? And if your triggers remain below, it's a termination condition. Once price reaches the area, we're done with price. Triggers will tell the story. So price reaches resistance. Where are my triggers? They're still below. This is a termination condition. Price reaches Fibonacci support. Where are my triggers? They've remained above. This is a termination condition. So when I reach a termination condition, there's 4 things that can happen, and you will never know which one it's going to be. And I want you to accept that from day one. It could create a big, ugly, untradeable bounce that if you choose to trade into that area, it could pull you out of that position quickly with a loss. It could create a fight between buyers and sellers, and that indecision creates a lot of fluctuations. Again, easy way to lose money. It could break, which is great. We'll look for more trend trades, or it could stop the market completely and create a reversal. And if a termination condition where the triggers don't get through reverses the market, large triggers go from green to red or red to green, that's a strong top. And that's a strong bottom. And a strong top or bottom isn't mandatory to take a high probability trade, but it creates the best of the best high probability trend trades. So strong tops and bottoms will come into play for other trades that you see. But the gist of it is that price reaches, triggers don't break. Rule number 2 is not met. No trades into the area. Wait for the reaction. Everybody good with that? I hope so, because look at that. Price reached Fibonacci resistance and a big untradeable bounce. Weak triggers at Fibonacci resistance, and there's a reversal. Sometimes they break with momentum. Weakness creates the reversal. Look at the big bounce right at the decision-making area. So guys, go back and start taking some pictures and you'll learn to trust it. Very often, they break. They typically break with momentum. So let's go through. This is what it looks like when it breaks, guys. Number 1 says price reaches resistance. Triggers are still below. This is a termination condition. Wait to see what the reaction is. That's the highest chance of giving yourself the biggest advantage. Just wait. Sometimes it's a termination condition for half a second. And then if it's going to break, it gives you this look. Number 2, your small triggers, remember triggers tell the story, your small triggers will smash through the area, get 2 or 3 points above, but your large triggers, they're lollygaggers, they're hanging behind, they're still below that Fibonacci resistance. This is what we call a 50-50 look, guys. It's on the plan I'm giving you. And 50-50 is nothing more than a reference to where your triggers are. 50% have gotten through the area, 50% have not. This is going to be your first medium probability trade. But because this look with odds favorable momentum only gives me the potential to break, it's not a clear path, these trades have to be managed a little more assertively. This is the trade that requires that strong bottom before it. And this is really going to be the majority of everything you do. And your chart reading will allow you to manage a little more assertively. But once the small triggers and the large triggers, each line of both, get above Fibonacci resistance, well then Fibonacci resistance behaves as support. The area is considered broken and your path is clear. And guys, with this momentum and that clear path, that's when you're going to look for entries on your smaller, faster chart. So it's kind of a life cycle. First, it's a termination condition. It's always a termination condition. Wait for the reaction. Then it has the potential to break, but it's not broken. Manage assertively. That's your second trade. But once it's a clear path, support becomes resistance. The path is clear. And guys, your path remains clear until you reach the next area, which is my segue to the bad news for you adrenaline junkies. There's going to be times when your path isn't clear because areas are stacked. And this is 90% of your day. And guys, it's okay to do nothing. The futures markets trade trillions every day, billions every hour is exchanged. You need $400 a day to be in a 6-figure income based on your trading. That's it. It's not necessary to be in every move. You don't have to trade into areas hoping they break. You don't have to trade without momentum, believing that momentum will never return to the market. Guys, find your advantages in between Fibonacci with momentum, and it's amazing how stress-free trading can be. So let's go see again. And that's kind of it, right? There it goes. First, it's a termination. Then it has potential. This is probably your entry on that potential to break. And then even with odds favorable momentum, the market stops cold. When support finally breaks, it becomes resistance. When support finally breaks, it becomes resistance. When support finally breaks, we're witnessing it behaving as resistance. Pretty cool, right? So keep it basic. Let it either be a termination or a clear path for a little bit. And then you'll learn how to capitalize on the next level. But if you have momentum and the path is clear, guys, let's go to the smaller, faster chart. Let's go to the refinement chart. And there's one time on that chart where you'll identify a termination condition. Only one. 3 divergences in the same price range can terminate the trend. Learn that phrase. And guys, you won't see the change coming on that large chart. It's slow. This is the small chart giving a heads up that things are changing. This is the only time I'll let the small chart talk me out of a high probability trend trade, because 3 divergences is 3 losses of momentum in the exact same range. And even though this chart is screaming down, this lets me know change is coming. So if I see 3 divergences when I go look for my entry, I have to pump the brakes. If I'm in a beautiful trend trade and 3 divergences print, it's a great opportunity for me to exit. But if it's not there, we're going to go to the small chart. We're going to define where the small crowd is most likely to fail, where the market is most likely to bounce and continue with the trend. So the rules say use a limit order at areas inside of triggers. I like to say it, use the limit order to buy or sell a pullback, that fight from the small crowd. Let it be at an area, fib, midband, or yellow 1-to-1, because the same way areas on the large chart can stop forward progress, they can give us a magnificent bounce in the direction of the trend from that retracement. But this is the part I want you to commit to. Those areas need to be in triggers. They need to be inside of triggers, large triggers. Because large triggers, that's where price returns, guys. Price always pulls back to large triggers. It does it on a large chart and it does it on a small chart. And it's been doing it since the beginning of time. Price pulls away, pulls back to the triggers. Price pulls away, pulls back to the triggers. That's that tail. Price pulls away, pulls back to the triggers. Price pulls away, pulls back to those large triggers, guys, over and over and over. So what we're going to do is we're going to allow these large triggers to define where the retracement is most likely to occur. Somewhere from the top of the triggers to the bottom of the triggers. And since there's 2 charts, there's 2 large triggers. 5-1 triggers are smooth. 13-2 large triggers are stepped. We call these synthetic triggers because they're pulled from the other time frame. This is where the retracement's most likely to occur. So getting back to the best of the best, guys, this is your highest probability scenario. Favorable large triggers. When both large triggers are overlapping, one on top of the other, 2 snakes riding piggyback, it's going to give you the smallest location where the retracement is most likely to go. And then when you pop in a fib, midband, or yellow 1 in there, you have the tiniest little window where the market is most likely to continue in the direction of the trend, guys. Triggers aren't bouncy. They define retracements. Areas are what create that ricochet. So let's define an entry. You know what? Let's define an entry from the spreadsheet instead of the same one that we do every day. Something new for you guys to look at. Large chart leads the way. So guys, this is a strong bottom. This is a no triggers through termination that reversed the market. Not a rule, but it makes me feel good about what I'm looking at. This is odds favorable momentum, smalls above the large, space between. Everybody sees it, right? Price has not reached Fibonacci. All my triggers are above the previous. This is the best of the best look, guys. This is the look that says, Mark, go find an entry. Go to the small chart. And I'm going to go look for an entry. And I'm going to look at triggers, and I'm going to look at areas. And I'm not going to worry about one stupid little line on a small chart because termination conditions are defined on a large chart. So what I'm going to do is I'm going to wait for the fight. Everything is screaming up, and I want my small chart to give me a reversal bar because the reversal bar signals the beginning of the pullback. The reversal bar says the small crowd is fighting. The reversal bar says, hey, here comes the retracement. Let's define where that retracement is most likely to go. And it's most likely to go somewhere from the highest point of the triggers to the lowest point of the triggers. And guys, this is a pretty big box. That's a pretty good range where price may retrace. So I'm going to make that box smaller. I'm going to find the areas inside of those triggers, inside of that retracement zone. And from the highest level of support to the lowest level of support, guys, this is my window of opportunity. This is where the market is most likely to bounce. This is where the small crowd is most likely to fail. In this window, the tighter the triggers, the smaller the box typically. So once I identify that, the only thing left for me to do is to activate a limit order about 2 ticks above that highest point of support and to say, all right, small crowd, come get me. I'm going to wait, hope, wish, and pray that the small crowd gets there. because there's nothing else that you can do. Once you activate that limit order, you've done all you can do. You've insisted on momentum. You've demanded a clear path. You've pinpointed where the market is most likely to continue. And guys, if the small crowd gets there, then you're in that trade. So everything says up. Wait for the reversal bar. Define where the retracement's most likely to occur. Define where it's most likely to bounce. Guys, study this pattern and develop the courage to activate a limit order 2 ticks above that highest point of support. And if the small crowd gets there, guys, you're in a long position. You're in a trade. You're in a high probability trade. You're in a trade where the odds are favorable for the market to continue up because of rule number 1, that advantage of momentum. You're in a trade with room to your profit targets with a clear path because there's no termination conditions. You're in a trade coming from the entry area where the market is most likely to continue, where the small crowd is most likely to fail. And ladies and gentlemen, this is the best of the best. This is your highest probability chance of success. So reversal bar starts the pullback. Define where the retracement may go. Define where it's most likely to bounce. Know that your order goes 2 ticks above that highest level. And here's one of the great things, because when you understand that price may retrace to the bottom of these triggers, when you understand it's most likely to bounce from the areas within, then you realize that when I get to the wrong side of the triggers, when I get outside of those triggers, when I go beyond those triggers, beyond those areas likely to create a bounce, guys, that's not the goodness. That's where rule number 3 is no longer in play. That's where your advantage is gone. We call this area below the triggers, on the wrong side of the triggers, where the market should not go. You're going to learn to ignore lines on the other side of the triggers. Make money going down too. Reversal bar starts the process. Define the retracement zone. Identify where it's most likely to bounce. And understand that anything on the wrong side of the triggers, guys, you don't know if, when, or where that market is going to bounce, continue down. So this is the wrong side. This is where the market shouldn't go. You're going to learn to ignore these lines. You're going to give them no value, no stock in your trade at all. And you're going to use that concept of identifying where the market is most likely to continue to identify where the market is not supposed to go, where it shouldn't go. And that's going to be your initial stop placement. And you're going to taunt the small crowd. You're going to have so much confidence in this methodology that you're going to say the only way I will ever exit this trade is if they push up beyond all the good stuff, because my advantage is gone. And same here. The only way I'm gonna yield to this is if they hit my stop 4 or 5 ticks beyond those trigger lines, because this is where it shouldn't go if it's not going to work, and this is where it shouldn't go if it's not going to work. And guys, you're going to use that concept, and it's going to help reduce losers. And you're going to tell yourself, I'm not going to put my stop where the market may continue, where it may retrace. They're going to have to come get me. So this is your pattern. This is 2 charts, 3 rules, and it all begins with odds favorable momentum. And when I have it, I'm going to make sure that my path is clear. And guys, the market is trading all the way up here. We don't trade these tails. These tails, here's your tail right there. It's that pullback on the smaller, faster chart. From the top of this bar to the bottom of this bar is this entire retracement. And because we wait for the pullback to areas inside of favorable large triggers, the distance to potential trouble is the absolute furthest. Because we wait for the retracement to the areas inside of triggers, your risk, 4 to 5 ticks below those triggers, is right where the market shouldn't go. It's the least amount of risk. So guys, this is your pattern. And you can go back on a large chart and you can see a trigger line, and you can say to yourself, all right, that fib had the potential to break. All my momentum was there. Life is pretty darn good. Let me see what that tail looked like. And that tail, it hit resistance. Look at how big the retracement zone is. That's not a perfect look, but it's still a rules-based trade. Remember, when they're one on top of the other, it's a little easier. But that one still fits the bill. Let's see if we can find a better example. Just scrolling back, looking for potential, identifying tails. This is how you're going to study. Right to support, right at the top of the lower triggers. Those 3 divergences might have kept you out. And then it did it again up here, right back to support inside of triggers. All it is a pattern, guys. And patterns repeat themselves every day. So that's one of the ways you can go back and study these patterns. There's your 3 divergences in the same price range. So now to get to giving you guys everything you need. And that zip file that I just dropped in the room is called All You Need. Inside of that zip file is everything I'm about to share with you. And it starts with Chart Reading 101. Guys, go back and take 25 pictures each of strong triggers, weak triggers, clear path, and terminations. Take the time to write on your picture. This is why it's strong. This is the look. This is my recipe for identification. And this is what it means to me. So separation, colors match, odds favorable, momentum, rule 1 met. Small and large through the area. Haven't reached the next area. My path is clear. Rule number 2 is met. And the same thing for the opposites, guys. And you're going to post these in the spreadsheet, and you're going to go back and study them for a couple minutes each morning before you start, committing to the advantages, because momentum and path, this is your core. This is your foundation. These are the 2 that are gonna yield the biggest results for you, and they're going to work their way into everything that you do with this software. So the next thing I give you is the high probability trend trade checklist, the absolute best of the best way to take a high probability trend trade, which means that it starts from a strong top or bottom. It's not mandatory, but that's the one that makes me feel best about it. That's unicorns and sunshine, guys. And it's a no triggers through. Both lines of the triggers would have to get through for it to not be a strong top. Once it reverses the market, it's a strong top 8 bars later. First, it's a termination. Then it reverses the market 4 or 5 bars later. Now it's a strong bottom. Guys, strong tops and bottoms are rule number 1 for HVA trades, momentum trades, that breakout white bar trade that John Novak teaches. Odds favorable momentum on both charts. Best of the best. Not mandatory. Best of the best when it's on both charts. Separation is strength. Overlapping is weakness. Be able to identify no terminations, which means that for the high probability trend trade, it's got to be number 3. Number 2 has to be managed assertively. When you start talking out loud about your advantages, you're going to identify the need to manage. Never trading into a line, it can stop the market. Where does my order go? Where's my entry, guys? Clearly defined at the areas inside of triggers. So this high probability trend trade checklist can be printed out and put on your desktop. And then Trina, I'm going to lift you up on a pedestal real quick. Trina does market replay with her high probability trend trade checklist in front of her, and she pauses the market to make sure that her rules are met, and has fantastic results, and she's building trust, and she's seeing the potential of following a solid plan. So Trina, I love that you do that. Guys, nobody has ever in the history of this checklist been able to mark yes to all 4 and done worse than 70%. Had a couple engineer guys get up to somewhere between 82 and 83%. I forget, so I don't want to lie to you. But it's not uncommon. So we're learning the basics, guys. We're learning the process that yields the results. Also in that zip file is your KISS plan, the Keep It Simple plan. And guys, this is a stepping stone in your learning journey. It's designed to optimize your chances of success with the high probability trend trade as you learn to read your indicators. Through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, if you feel like you need more, you'll create your next plan. If you feel like you need more, Nexgen has a couple other trades you can take. But I'm going to say it right now, and I think Jerry's going to back me on it. You're going to realize that you really don't need more. You just need to be patient to wait for the best of the best. And daily goals don't seem to be very difficult for people to reach when they follow a very easy plan. And there's 2 things you have to know before you sit down to trade and you're not on simulator. If you're on simulator, you're working through this. Why will I enter the trade? Guys, I'll enter the trade because my rules are met. That's the only reason I'll enter a trade. Because my rules are a description. They're a recipe. And they're a description of a pattern that has been proven by me to win more than it loses. If you verify and trust this pattern, there's no reason to not consistently enter when your rules are true. Guys, your rules help remove the emotions. Patience. In at 7, best trades came at 10. It happens sometimes, right, Jerry? I have video poker up on a screen. I have YouTube up on a screen. I've got my spare putter in here and a couple golf balls. I'll knock putts into cups all day long. Anything other than trading without my advantages. So learn how to commit to that. And then you have to know why you'll exit. And guys, the KISS plan covers that too. Exits are taken either at profit targets or when the advantages that you had to enter the trade are gone. They've gone away. So if I get into a high probability trend trade and the market pushes 4 or 5 ticks beyond those trigger lines, I exit. My advantage is gone. If I enter a high probability trend trade and 3 divergences print on my smaller, faster chart, I exit. My advantage is gone. And guys, entries and exits are all we do. It's just ticks in the market. So define your entry, because great entries create manageable trades. And then you have to manage it. And guys, management's what makes most people pucker up, because now you feel like you have something to lose. It's almost like we instantly forget that the pattern wins more than it loses once we're in, because we watch that P&L tick and go up and down and it's against us and for us. And oh man, adrenaline city, right? So the management plan in the KISS plan, it's based on 2 contracts and it's designed to help remove a lot of that emotion. The KISS plan's designed to help you understand and trust stop placement, but more importantly, the KISS plan's focused on getting you paid, because hope steps in and hope keeps you from taking the correct exit, from getting out when the advantages are gone. Hey, good morning, Alexandra. So the management plan is very pragmatic. It's very if-then. It's very mechanical. And as you learn to create your own management plan, because you will, based on your experience reading the indicators, this gives you the opportunity to realize profits, to be successful, and to build confidence from that success. So the KISS plan management is 100% dependent on your ability to pinpoint the entry. That's why we talk about entries for a whole hour before we get into management. So the entry is 2 ticks below resistance inside of triggers. If that's your entry, then your initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. Guys, you'll know your risk before you ever enter the market. You'll have to make the decision. Is $150 worth of risk from 34 at the entry to 49 at the stop? Am I okay with that? Some of you are, some of you are not. I'm going to tell you right now, every trade I take has about $300 risk initially. I'm cool with it. Guys, if this hits your panic button and you say, well, I'll give it $50, you're at resistance inside of triggers. I'll give it $80. You're right in the retracement zone. And the market loves to come take your money and then go do what you thought it was going to do. So commit to the stops initially. Don't worry, you'll be able to move them. Your targets are predefined, $100 and $200. Remember, the goal is to get paid. That's the only reason we're doing this. So if they don't hit your stop, if you don't take a loser, it's gonna confirm the trade, guys. You're gonna get a reversal bar in the direction of your trade, and you're going to redefine where the market should not go. And that is 2 ticks above that reversal bar, or in a long trade, 2 ticks below that reversal bar. And it doesn't guarantee a winner, and it doesn't mandate that you will get paid. But what it does is that if things go wrong in this trade, now you take a tiny little loss. And man, $30 doesn't hurt a lot. Not in futures trading, not at all. Your targets are still out there. They're waiting. And if they don't get that tiny little stop with that minimal little risk, it means they're going to your first target. And if price reaches your first target, 1 contract is automatically removed. Those funds go into your account With one contract remaining, guys, your new stop is break even. You have been paid, you're a winner, success, confident, and now you have nothing to lose. And guys, you have no risk on that trade after you've won. And you're either going to get stopped out break even, or it's going to go to your second target. Your second target was at $200, which means if price reaches your second target, it's a $300 trade. And guys, this is in there as well. $300 a day, if that's the best you do every day, is 75 grand a year from trading. But this wasn't your day, right? This was 4 minutes of your day. That high probability trend trade was a 4-minute snippet out of an 8-hour day, producing $300. And guys, that's the goal. The goal is consistency. Consistent winners each and every day. Consistent profits each and every day. Anybody with what, Alexandro? So right click on your chart, brother. Right click. Go to reload all historical data. You got a little funky tick work going on there. This 99 out of 100 times fixes it for you. Let me know if that works for you. So guys, this is your reminder. You don't have to make all the money every trade. You don't have to make $1,000 every trade. Hell, if you made $100 4 times throughout the day, you're in 6 figures. Your bank account doesn't know what increments the money got there. So learn how to be consistent. Focus on the process, guys. And there's an easy way to do it, or an easier way. And the easier way is to learn the rules, break them down individually, study them, know what they look like on their own so you can piece them together to create a trade. Practice, 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 practice. We all have these giant egos. My favorite saying is, well, Mark, I can't really learn something if I don't have a skin in the game. Guys, utter bullshit. Pardon my French. Having a skin in the game is buying the software. Having a skin in the game is committing to giving yourself the best chance of success. You're welcome, Alexandro. Every now and then I can pull a little tech stuff out. Guys, learn the rules, simulate, practice, post in the room. Simplify. I've given you everything that you need to be successful with this software. The only thing lacking at this point is the repetition for it to be easy. Thank you, Wayne. It's the repetition. It's the consistent seat time, guys, to make these patterns jump off the page at you. So the next 2 hours are dedicated to your chart reads. The next 2 hours are dedicated to what you do. But I want to remind you, inside of that zip file is also a file called the pictures you can take. Guys, I take 5 or 6 pictures every trade. I take pre-trade, I take during the trade, I take after the trade. And if my rules aren't met, I take a picture of my rules not being met instead of taking the trade. Guys, after the trade and the no trade, these are the ones that get you the best feedback. Make sure you're posting those in the room. And then inside of that zip file is also, this is everything that we've talked about from 9 a.m. to 10 a.m. consolidated into 2 pages. And then also in there is the PowerPoint that I use to teach each and every day. I mean, you have everything. The only thing you need to do is take a little time and go past this stage. Get through that first couple days where it feels overwhelming and everything mellows out. Right around day 3, it gets easy. Not easy, but it gets recognizable. You learn the terminology. You understand the names of the indicators. You know how to post in the room, and you accept the feedback, because the feedback is going to celebrate every victory, and it's also going to point out the things that are creating challenges. So I'm going to take a break. I take a break every day. I firmly believe that if you sit in front of the market for hours on end, especially if your rules aren't met. Jerry said he was patient. He was in at 7 a.m. Best trades came at 10. Guys, that 3 hours makes you start questioning whether or not you should try to trade into that termination condition. That 3 hours makes you question whether or not you should just go ahead and trade without the momentum. So learn how to stand up and walk away every now and then. It'll help. It really does. And that's exactly what I'm going to do right now. When I come back, we're going to look at everything you guys have posted. Do not be the trade police, guys. We're going to talk about advantages. If you're learning to follow the rules, Jerry, you're patient. It's just mandatory. Um, we're going to talk about on every chart momentum, path, and entry, guys. Momentum, path, and entry. Every chart. I don't care what kind of trade it is. Momentum, path, and entry. If you don't take the time to describe what you see regarding momentum, path, and entry, if you don't tell me why, it's going to be a short little feedback session. Because if you really want help, you're going to tell me this, guys. If you just want to show off, don't annotate your chart. I'll look at it and go, man, it went up, you went up. Great job. And we'll go to the next person that wants the lessons. So really, really, really do that one. And remember, squeaky wheel gets the grease. I'll see you guys in 5 minutes or so. Go stretch your legs. and gals, let's get back to it. Let me scroll up to the very top of the room. We're going to look at what you guys have posted and see what we can come up with. Where the heck is the top of the room? There it is. Miss Jen got us going today. Little double post. And guys, I love it when you drop 2, 3, 4 pictures in there. I think it's pretty cool. I certainly don't mind giving the feedback. So Jen says, let's take a look. This is a bad top. It's not even a top, really. Look at those large triggers, Jen. They are still screaming up. Every trigger above this fib, every trigger above this fib, everything's above everything. And they're not a full bar away, Jen. Do you see that? This bar doesn't become a reversal bar until 70. And these are at 69. And it's funny. And guys, I never tell you how to trade. I never do. It's not my job. Someone in this room, Jen, I'm just going to tell a story. Someone in this room mentioned that they had 20 days of profit targets reached with nothing but high probability trend trades. Nothing but high probability trend trades. Reaching goals every day. And suddenly, fighting momentum, fighting direction, hoping something holds instead of waiting to take the easy ones, works its way in. So I'm not going to say who that person was, but very often big strings of wins create a Superman complex in people. And they're like, they forget everything that brought them success. And they say, F it, I'm so stinking smart, I'm going to start fighting stuff. Just, I don't know. If I remember the name, Jen, I'll mention it. But that happens a lot. And guys, when you post in my room and you show me stuff that is 100% outside of your plan, I'll mention it. And if you're working on a new trade, go, hey, I'm working on a new trade. Now you have the gap theory. Now you have a full bar back. And Jen, it's not a strong top yet. Those large triggers are still up. They're still green. So you didn't take the trade back to the large triggers to the strong top. That would have been the one, because that's the actual pattern. That is price reaching large triggers a full bar away. That's your gap. That's okay. I don't know why bugger makes me laugh so hard. And Jen, can I give you a little, and just for grins. So here's the gap theory here, right? That's what you're talking about. There's an easier way. There's an easier way to catch this one. And when these small triggers roll, if you get a little stab back to the small triggers, I want to see if I can find something like that. Let the small triggers roll, then you have a fighting chance. Until the small triggers roll, it's really more of just, I hope this happens. So let's look at 1132 back there. Let's see if I can find an example of what I'm talking about. Off at 25, 1132. So that was it up here. Not quite a good one. You're going to delete it from your brain? Then I'll stop messing with it. But now I'm just curious. So there's your gap theory. There it is right there, Jen. I knew that the pattern was there. So this is for you guys, not Jen, because Jen's going to delete it. If I'm going to try to trade the gap back to the large, this is the highest probability look. Right here, where it pulls back to those triggers, that's your look. And it's about right here, and you still have plenty of room to make money on the way back. But instead of fighting odds favorable momentum up, you at least get some indication on the small chart that it's going to go down. So just something for you guys that like to try to trade that gap. That's the highest, best way that I've found to do it. So that's kind of it right there as well, if you were going to get back and gauge it. Good stuff, Miss Jen. Let's go back up to the top and see what we have. A lot of chit-chatting this morning in the room. I love that. What a great community this is. Everybody shows up. And then Wayne, you're just all the charts. So I'm going to 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 pictures. Are these all from today? Whew. All right. Trap between areas. I love this. Rule number 2 is not met. And Wayne says not taking a trade. I love the not my look trades. Self-reflection. So this is a good example. Guys, even some of the best traders in this room will make mistakes every now and then. This is odds favorable down, odds favorable down, odds favorable down, and Wayne went long. And Wayne, I'm assuming that your slaughter happened quickly, right? Sometimes, guys, you confuse your rules and go the wrong way. And I think that's all it was. And he's like, man, palm slap, make sure to get it into my brain. When everything says down, going down's the easy way. And if you had just gone short, it was an easy trade. I know that you made the mistake. But this is, guys, one of the biggest things. Fighting the trend, fighting momentum, it rarely works. Not from the middle of nowhere. All right, Chili Dog with split triggers. It's hard to tell where you got in. 62, so you're in 53.4, 55, 54, 53, 9. All right. I like split targets, but it looks like the challenge is you didn't get through the fib. Was it this one? Oh, you did. Okay, it's back here. I'm sorry. I'm looking at this, but it was back here. So you have momentum. You're through the fib. You get in. I love it. First target. So Wayne, I'm just going to say it once for everybody in the room. The Chili Dog trade is based solely on momentum, right? Does that make sense? Everybody in the room. This is a trade where the only thing you have going for you is momentum and path. That's it. Wayne, you are 1, 2, 3, 4, 5, 6, 7 bars into your advantage being gone. That's it. There's no reason to give that much back on a trade that is solely momentum. I'm telling you guys, if momentum is the reason, let that loss of momentum be the reason to get out. That's giving a lot back. And every now and then you'll get a runner, Wayne. But you probably remember this one from yesterday. As long as it's screaming in the direction of the trade, it's going to go. But once you get a reversal bar against it, that's the chili getting cold. Amen. Once you get the reversal bar against it, guys, there's no telling if or when it's going to... You don't know if it's going to be 10 bars up into a trend trade, right? This is a trade where it's nothing but momentum. It's okay to exit with a loss of momentum. But Wayne, that's up to you. But I'm obligated to say that. when I see people give so much back on these trades. There's a reason that it's quick. I love it. Odds favorable, clear path, perfect entry, first target, tighten up, second target. Really, really nice. Right on. So that's cool. That's totally cool. You're doing some research to see how it works out. I love that. I wish more people would do that. Set up for a chili dog, got a 50-50 instead. I love it. You're waiting for it to break and it turned into a trend trade, so you're like, let's take a trend trade. Absolutely beautiful. And trailing stop at the reversal bar should have been a tick below. Yeah, that's one of the tricks that I've learned, Wayne, is I'll go reversal bar marker plus a tick, always. Great trading though, dude. You're killing it. And I love that you're studying management. That you're saying, all right, this is what my current rules say. Let me go test patterns to see what I can get out of this market. Had to snap a quick pick since you wanted to get set up for the next CD. So entry is off to the side, no worries. Everything says up. I can see it right here. And man, instead of going counter trend, you're just riding momentum, which I really like, Wayne. Out, making sure you get profits, out at trouble. And then Wayne, this is one of those instances where you can do reversal bar plus a tick and just ride that momentum on the second contract until it gives you that condition for exit. And I think that's a great way for that second runner. Does that make sense? Maybe that'll be helpful. This is beautiful. And I get that. So, and I like it. Out at trouble. It's perfect. But Wayne, look at the momentum. Look at the momentum. Look at the momentum. If you get a wild hair and you say, let's see if it breaks. That reversal bar, force it to give you a reversal bar with momentum on every chart, because that's the look that breaks areas. And you'll give a little bit back, but you also have the potential. This is when I use that to get those runs. I'll never get mad at you for getting paid, but I know you're working on a management plan. Odds favorable, nothing in the way. Absolutely perfect. Really good momentum, so you ignored the mid band. And just beautiful. That was your loss of momentum, but you used the large chart momentum to get you down to the target. Nice job. Letting it run. The beginning of momentum. So, Wayne, your chili dog's on the wrong side. This isn't a chili dog fail. This is a late exit from a trend trade that stopped you out and you re-entered. Chili dog entry would be all the way up here. And then it's just beautiful. It turns into an awesome trend trade. You take it right up to trouble. Really nice. Guys, look at the level of study here. There's a reason Wayne is so stinking good. And there it is again. And then it breaks. Everything goes up. You go for the chili dog, and it just doesn't work out. 10 ticks got you to the tick, man, and that's a bummer. That happens sometimes. But it's definitely the right trade. It fits your rules 100%. Playing with trailing stops. This one was market flow up and down. I like it. With momentum, down bar, up bar. A lot of study, dude. Good stuff. Chili dog fail, strong trending market, everything's up. That looked good. And again, just holding longer than you should. Giving a lot back. I mean a lot back on this one, Wayne. And I'm just going to assume that's part of the study, the hey, let's see what happens. Don't touch the stops. Because it went up, it gave you the down bar. There's your up bar. That would be your new stop placement. And then it just tanks. So did you change your plan at all based on the study? There it is again. Odds favorable, potential to break. Mid-band caused a bounce. It can. And not the best momentum there, so the mid-band more likely maybe. Not really. Fine-tuned your entry. That's awesome. I love the study. I like this too. That one didn't work. And on the way back down, you get back in and get it back. Mid-bar entry since price didn't reach the small chart mid-band. Yeah, it did. It smacked right into it. Oh, no, it didn't. That's your large chart mid-band. Nice. Didn't quite get your entry, so you catch it on the way down with all the advantages. Great job. All the momentum, you get in, give a lot back, get back in on the wrong side, and it doesn't work. Had enough to look at. Careful tomorrow. The Ides of March. Yeah, have a great weekend. Yeah, wrong side. I love this one, better chance, but now you're already on that wrong side. So yeah, isn't it funny how one or two words, guys, one or two words will change the whole idea. Look at that one, right side. So that was odds favorable and everything's going up, but do you see how you're left to the small triggers? It's going up until you get that reversal bar on the wrong side. Great job on this one, Wayne. I don't know that you got lucky. I think entering anywhere below is risky, and once you get above, it's going to keep going until that reversal bar. Great stuff, dude. Everything is up, absolutely nothing in the way. A little early for the chili dog, but with that much momentum everywhere, rock star. Absolute rock star. Good. Sometimes I feel like I can't teach you guys anything anymore because you're so darn smart. And Wayne, I appreciate it when you tell me that you learned something. Great stuff. Guys, that was like 12 pictures. I want to see that from you guys. I want you guys to give me that level. I want to see that you're studying, that you're testing things, that you're trying things, that you're doing your best to get to where it is you want to go. That's how you do it. I just help with the reads. So, Joel, wait for back of the bar to clear. So not down here. Joel, you going to learn that chili dog? So guys, here's the rules. Back of the bar clears trouble, which means that price is all the way up here when it's time to enter, which means that you have to have room to that fib. And your entry, Joel, would have been all the way up here somewhere if you were following the rules. But Joel, I'm going to tell you right now from personal experience, the NASDAQ is a horrible place to take this trade. There's too many fluctuations. There's too much indecision. There's too many bounces and overruns, and there's so much ugly in the NASDAQ that it's a difficult one to trade. It works less. It works less. NASDAQ is seizure inducing. I love it. That's three divergences in the same price range. Absolutely. It's a termination condition. It's not a strong top. So what happened, Joel? Check it out. I love this picture. The market goes up and from the middle of nowhere it retraces down. How am I supposed to know? Three divergences just gives a little heads up. Using the small chart to see large chart change. You get kicked out in the NASDAQ all the time. Guys, the NASDAQ's not for beginners. The NASDAQ is next level. It is 10 times faster. It overruns. You have to know exactly what you're looking for before you ever sit down in the NASDAQ. Same way you would use the 13-2, Boaz. Let me go through the better dads and then I'm going to answer your question. Yeah, a little print there, so there we go. Termination, full reversal, odds favorable, clear path, perfect entry, didn't work. This is a beautiful trade, better dad. So here's the question. Even though this one lost, would you take it again if it's set up like this? You did it perfect. This is what we refer to as a cost of doing business, guys. This is the 20 to 30% compared to the 70 to 80. Better Dad, you couldn't have done this better. I mean, couldn't have done this better. Nicely done. Potential to break. You get in high. Man, that's a big stop. You made money and you went break even, but it slipped you, didn't it? Better Dad, do you see how far away those large triggers are? More likely to close the gap, especially from a weak bottom. Great reaction time getting paid. But man, don't give it back when those large triggers are dragging. Great stuff. So Boaz, how can I use the 21? I'm going to show you something cool, Boaz. Let's see. I'm going to get rid of that. I'm going to get rid of that. I'm going to get rid of that. Let me take a picture. So Boaz, that's your 21 chart. On a 13-2 chart, when you have odds favorable momentum and a clear path, you're going to look for an entry, right? Because it's a huge advantage. It's the same on a 21. But here's the challenge, and I'm going to show you the challenge. If the 13-2 is a slow-moving chart, the 21 is a freaking dinosaur. It's even slower. So how can I use the 21 to help me on the 13-2? I'm going to find one pattern here for you real quick. So Boaz, I'm thinking about taking that gap theory. I'm thinking about trading back to the large triggers when they're a full bar away. Does it stand to reason that if the large chart, if the 21 chart is odds favorable momentum up and there's nothing in the way, doesn't it make sense that this is more likely to win? Why? Because this is just a trend trade. You've just switched the levels. Instead of 13-2-5-1, now you're 21-13-2. Does that make sense? Let me build a 21. I like these questions. Do I think you need it? No. And that's just me personally. Why? Because when you start looking for more charts to give you more opportunities, what you're going to do is you're going to pick the chart that gives you an entry. Most people do it. Well, my Renko charts, Andy, you're doing great. My Renko charts give me all I need. So check it out. This is your 21. Let me see. Whoops. I want to find where that picture was. That's my 5-1. That's my 13-2. That's my 21. So that was this one. Let me get rid of everything. Guys, all it is trickle-down theory. So watch this. Boaz, odds favorable, clear path. There's the circle on the 21. Let's find it on the 13-2. There it is on the 13.2. So everything is screaming up. What's it look like on the 5.1? How would I use this? The path is clear, the trend is strong. Here's my areas. Maybe I wait for confirmation and take a shot. But remember, this is slow. Oops. Odds favorable momentum, clear path. There's your circle. What's it look like on the 13.2? There's your gap theory. This is, I think, one of the best ways to use it. When this is odds favorable momentum and clear path, I'm going to find a way to sell the mid band. And what's it look like on the small chart? Whoops. It's right here. So maybe I wait for a close on the other side. Does that make sense? But one of the other challenges is, remember, this is a big slow chart. And I want to see what that looked like at 11:55. You might see this and skip this. Because you see how that's a termination condition on the 21 Boaz, but that's the perfect trade on a 13.2. So now you're going to run the chance of letting this chart talk you out of the perfect trade. And you also run the chance of letting this chart talk you into the wrong trade. So make sure that when you use it, you have a plan. You know exactly what you're using it for, where you're using it, why you're using it, and be consistent. I think it's best used if you're looking for one of those gap theory trades, because then you force it into the same role that you make the 13.2 take when you're looking for the high probability trend trade. I hope that was helpful. Do you need it? I don't think so. But guys, if you ask me how to use it, I'll give you what I got. Good stuff. Let's see who's next. Better Dad, we got yours. Joel. Oh, Better Dad is off running the kids. We'll see what he gets back. Odds favorable, 50-50, no divergence, got the entry, and jump ship. 1940, yeah. Just didn't work, Joel. I'm glad you got out break even. No reason to lose money. You made a little. Great job. Great job. You guys know, and I'm just going to say it, you folks that are struggling with a little consistency, NASDAQ's hard to be consistent on. Gosh, this is gorgeous, isn't it? Odds favorable, everything is strong, nothing in the way, pull back to resistance, first target hit, and break even on the same bar. Bummer. That's beautiful. Guys, break even probably isn't your best stop. Break even, you're going to change your plan over time. Just so you know, break even is the KISS plan designed to help you learn how to get paid a little bit. You will create a different plan as you grow with the software. But you still got paid. Amen, Wayne. Still made 100 and got paid. And it'll just get better. Like, the more time you spend with it, the more management changes. The KISS plan is designed to just get you accustomed to being paid. I'll take $100 10 times a day, every day. All right, Miss Trina, weak bottom, but you do have odds favorable. You do have a clear path. You did take an awesome entry, and it did stop you out. So in hindsight, I should have seen risk was high because large triggers really wide. Should have waited for confirmation bar. So guys, let me translate that. Trina said, because the retracement zone is so big, because the risk from the area to where my stop needs to go is so large. Trina says it's not perfect. I should have waited for an up bar so I could reduce my risk a little bit and have my stop established. And guys, there never was one. And Trina, that would have kept you out of a potential loser. I agree with that 100%. If the entry isn't perfect, guys, it's okay to demand confirmation. That is almost strong. It's hard to tell. It's right on the line. Odds favorable, clear path, perfect entry, easy money. Great job, Trina. 2 times over, great job. I like it. Figure out where I was. Better Dad, you in here? Live sim today, Trina? Let me know how it goes. Post those pictures. All the same, still look good, went for it again. I love it. So you get in, make money, break even, realize nothing changed, re-enter, make money again, break even again. Beautiful. And Better Dad, are you in here? I saw you were taking the kids to school. Probably not. That was 6 minutes ago. So we'll go back when he gets here. We'll talk about those again. Day's not over. Just because you get stopped out, break even. Stay in the game. All right, Wayne. Where do you see the strong bottom? I've got the triggers through. I do have a weak bottom. And you don't have 50-50. It's directly into a termination condition. But you do have momentum. Does that make sense, Wayne? Triggers got through. Not a strong bottom. Directly into fibs. None of the triggers break. Heck, I'm not even sure the small triggers got through the 1-to-1s yet. Definitely not a 50-50 or a clear path. But guys, let's talk about weighing things out. No divergence, odds favorable momentum, confirmation bar, out at trouble. When it's not perfect, you can manage assertively. Gold, Alexandra, that's gold. And gold is a temperamental, crazy market. And it takes a little bit to get the personality. Target 1 was 1 tick below the term. I love it. Should have followed my rule of 3. Would have been paid on the first. I don't know what the rule of 3 is. Stop moved up behind the reversal bars. Nice job. 3 ticks. 3 ticks below the term. I got you. Got you now. It took me a second. I had to read that one. It's still, man, if I'm going to take a shot, Wayne, I'm doing it with that look. I think you did it well. Is it a high probability trend trade? Of course not. It is all in determination conditions. But when you start getting comfortable with your chart reads, you'll find more opportunities. Clear path, momentum, you get in above, get out with momentum. Joel, great job. Nicely done. Momentum, clear path, jump in, jump out. Great job, Joel. 2 in a row. Solid. Alessandro, we fixed that one. Miss Jen. Odds favorable, potential to break. In with the confirmation bar. And then news. Dope. But it's still the right trade. And you made some money. But yeah, got to watch out for that news. Great trade, Jen. All right, Jerry, let's see what we got. Whoops, we've all done it. You know we've all done it. Missing a little bit here, so let's see. Odds favorable, potential to break the divergence low, JTFI market moving slower, strong triggers, large chart. So you just jumped in hoping it would work, and sure enough the pattern happened. And you get stopped out right at the area inside of the retracement zone. Do you see that, Jerry? You gave it 8 bars of hope and then got stopped out at the perfect entry. And what's nice is you took it, you said, whoa, that's the perfect entry. And then you got paid because of the momentum and path. So Jerry, if you're gonna hold this one, stops have to go where the market shouldn't. Does that make sense? It's a great lesson. This is one of those pictures where I would steal it and I would go to my spreadsheet and just under management, I would put this into a management one and I would put no stops at entries. Because Jerry, you're going to do this 100 times more. I know because I've done it 100 times at least. But if you take the time to annotate it and you just say, oh man, I got out where I should have been getting in, what happens is you either learn to hold this one or you exit this one with the close on the other side and you'll make a decision. But if the only reason is momentum, that's your loss of momentum right here. Take your little hickey. It turned into the perfect trade. Great job though. Way to keep your head in the game and get back in. You like the close at, what do you mean at 1 red? Help me out with that. The close at 1 red. Sorry, I'm artsy fartsy, so. Okay, 1 bar against momentum. I'm a big fan. What sucks though, Jerry, and forgive me if sucks isn't your favorite word. What sucks is that you have to accept a loss and you have to accept it quickly. And nobody likes to, because hope says, just hold on to it. And you can see exactly where hope runs out. And right here, Jerry, you thought you were the smartest man in the world. It's going now. And it refueled hope. It's so funny. It's like looking in a mirror when I look at y'all's charts. You guys do everything I've ever done. 62 to 72, 62 to 78. So $160 loss, $220 win. That's net 60. So your goal is, how do I eliminate the bigger loss so it doesn't offset the bigger win? And I think you have the right thing. You just ran out of patience for a minute. Great stuff, man. Everything says up. Potential to break, Jerry. Smalls are through, large are not. Potential to break. Perfect entry. Sure makes sense to get paid at the area, doesn't it? I think Wayne taught us that. Get in, get out of trouble. Because, Jerry, what if this would have been the one that dropped it like a ton of bricks? What if this would have been the one that held it and pushed it down to Fibonacci support? No, I'm out of nickels, Wayne. How about an attaboy and a virtual high five? Does that make sense, Jerry? Imperfect, out perfect, wait for the next trade. Great job, dude. Great job. And you're just letting the large chart lead the way. And there it is, JTFI. Everything's screaming down with nothing in the way. Let me get below the bouncy stuff. Get in. Again, could have gotten paid at the fib, Jerry. Instead, you gave it all back. So now you're learning how to manage, which is the second piece of the puzzle. And guys, every different trade has a different approach to management. Let me see if I have this. There we go. So check it out. And let me drop this in the room for you. This will be helpful for you guys that are starting to venture outside of the KISS plan. If I'm in a high probability trend trade, what's it going to take to get me in and out? Well, the KISS plan rules eventually, guys. If you're brand new, that's your whole plan. But eventually, you begin to recognize patterns, and there are other reasons to exit the trade when you start to go out. This helps you a little bit. The market was so fast that you showed up late, you got paid to the fib? Okay. So if you take a 50-50 trade, you have to know what it's going to take to get you out. If you're in a momentum trade, you have to know what it's going to take to get you out. If you're an HVA trade. So guys, the more trades you add in your plan as a brand new user, the more likely you are to confuse things. Just throwing that out there. Do with it what you will. But Jerry, great trades. You're letting the large chart lead the way on everything. And now I just think it's a little management. A little management to get more out of your beautiful entries. You were set up for the chili dog. Chose not to take it. That's okay. Because the smalls were getting back to the large. And you know that it's momentum based. And then it probably said, I think you said you missed the trend trade that set up after. And that happens. I like it though. When you know that it's a momentum-based trade and you visually see that momentum is going away, to make that decision to not take the trade, to wait for the trend trade is pretty smart. All right, Alessandro. Posting in the room now. Let's clear some of the backlog here. How you feeling today, Alessandro? Because you're new. Do I need to put my gloves on for you, or are we just going to go to town? No worries. So what you posted here, let's define it. This is what we call the gap theory. So your gap theory, Alessandro, is when it hits the midband. Do you see the position of the large triggers? So the gap theory here says if price accelerates away from the large triggers and hits fibs 1 to 1s or a midband, it is more likely to return to the large triggers if they are a full bar away. So how do we gauge that? We gauge that using this reversal bar marker right there. And do you see how there's room to create a full reversal bar before they impact? That's your gap theory. That's the full bar away. Now here, what you have is a termination condition that already held. Your small triggers rolled, your large triggers rolled. Actually, this would be considered a strong top. But you don't have momentum yet. Your path isn't clear. And this is very much, for the new user, a sit on my hands and do nothing look. Let me give you guys that picture. So let's go see the other side. And that's it. So with that gap theory, you don't want to go short with everything screaming up. And this doesn't give you a whole lot of room to close the gap. So doing nothing there, Alessandro, was perfect. Great job. Oop, and that's the same picture. Little annotation. Was a full bar away, and then now you're in the transition. So what's happening over here, let me bump that up, is you're saying to yourself, it could go down because of that, but it could go up because my trend is up. In this circle that you created, this is where the buyers and sellers are going to make a decision. And you could either try to predict their decision, Or you could let it sort out and go back to odds favorable momentum and give you that clear path. I think you did a great job on this one by being patient because it's not clear what's going to happen just yet. Good job. Did that all make sense? Perfect. Let's see. I think this was CAV. Triggers up, wide, not a clear path. Large triggers are clearly below the fib. This is a 50-50. Pulls right back to support inside of triggers. Quick profits. Place the limit order at the area inside of triggers. Reach your profits. Not a clear path, Cav. Large triggers are below, but you do have the greatest momentum ever. And you got all those areas right at those triggers. Very nicely done. And guys, there's times where I'll fight you on your annotation, where I'll say, man, that's not a clear path. Here's what the rules say. That's why it's not. But it's still a great trade. Miss Jen, odds favorable, potential to break. You love confirmation bars. Out above trouble, out with the second divergence. Couple pennies there. Well, neither of the large triggers were above it. They're both still clearly below the fib. But yeah, you're right. Both need to go above. Jen, you're just developing trust again. You've been hurt before. Lied to, cheated on. You're just learning to trust again. Watch this. Jen, I just want you to look at that picture. If you had $100 and you had to bet up or down, what would you bet? You'd bet down. If you had to tell M where the market was most likely to continue its journey down, where would you say it's most likely to continue its journey down? Would you say somewhere down here or on the bouncy stuff with that look? You'd say on the bouncy stuff. There's your bouncy stuff. And when you get in, let me see, 5, 8, when you're in 4 points below the bouncy stuff, it's a false sense of security because you actually have less risk on this trade getting in at the areas than you do with confirmation. Does that make sense? But this one feels better. I totally get that. Totally get that that one feels better. And it gives you room to manage to trouble. I think confirmation bars give us a little false sense of security. I want you to look at that common thread. It's not anything Nexgen teaches, but Jen, I want you to stare at that picture for a little bit. DM me if you have any questions. It's nothing that we teach, but it looks like it happened quite a few times on your chart. I wonder if there's something to that. Cab directly into a termination condition with all the momentum from a strong bottom, no divergence, strong triggers, willing to take a shot, manage aggressively. Nicely done, Cav. Guys, it's not the end of the road. Cav just gave you the picture on if you're going to trade into termination conditions, the highest probability way to do it. Odds favorable, potential to break. There's the pullback to support inside of triggers. So Cav, Oh no, this is Jen. Jen, that's a NASDAQ rule. You're not trading NASDAQ anymore. Stop calling your ex-boyfriend. You've moved on. Beautiful trade. Beautiful trade. And guys, this is one of those things. You switched markets, but your brain hasn't forgotten what you learned. But even if you had, that's enter at the area because they're a full bar away. But it's still, with all these advantages, it's a great trade, Jen. NASDAQ still hanging in the brain. NASDAQ will do that. It's hard to break up with the NASDAQ. I've tried. I love trading the NASDAQ. It suits my brain. It really does. Doesn't suit everybody's. And then Alessandro, are you ready for the question? I'm going to tell a story. When I was working on my English Lit major, there's this concept in writing called purple prose, which means that you put a bunch of information out there, but it's useless. It doesn't pertain to anything. So, Alessandro, why? This is my question to you. In an uptrend, why did you go short? With the smalls above the large, why did you go short? With three divergences not broken, why did you go short? And your answer just has to be your answer. But there's no reason that I teach to take this trade. It is a strong top. That might be one of your whys. So what happens, Alessandro, is check this out. It came from a weak bottom. Created a strong top. More likely. Okay. More likely to continue down. But here's the deal. Alessandro, your answer doesn't have to be right. But what I'm giving you right now is the keys to the kingdom. If you write why on everything, if you write why, that's how you're going to learn. Because the result doesn't mean crap about this. It's how did you get there? What were you seeing? What were you thinking? Oops. So more likely to continue down. Let small chart roll in direction of expectation. Got in below divergence, hoping momentum pushes. So check it out, Alexandro. Now, instead of strong top but not full bar away with a question mark, I said, wait a minute. Well, I had a weak bottom, and that's a strong top, and everything's rolling, and I waited to clear trouble, and holy crap, I might be onto something here. And then you post this in the room, and we have this awesome talk about it. And I say, all right, understand that you're fighting trend, but look where you're coming from. And I promise you, you're going to get to where you want to be, and we're going to get you to where you want to be. But I want you to promise me. Start telling me why. I don't care what the answer is. I don't grade you on your answer, but it lets me know what you're thinking. It lets me know that you're reading the indicators properly. And that's what's going to get you where you want to be. Wayne, you're welcome. I love challenging you every day. Putting all your trades into a journal has done amazing things for pointing out that not following the rules was killing you. I've done 4 trades today, 3 out of 4 win, up 660 for the day, up 7,500 for the week, and learn how to do it better next week. It will make your life better and your family's life better for the rest of your days. So grateful. Wayne, thank you for that, and thank you for posting that. Oh man, I got chills. I literally have chills on my arms right now. All the feedback, guys. 9 out of 10 times we don't know when we're making mistakes. That's why you post in the room. And 9 out of 10 times you're going to justify your mistakes. That's why we post in the room. My whole job is to look at your pictures without a shred of anxiety or fear and just talk about the reads. And that's what we do. So, Alessandro, I like the thought process on here. And if you had put all that, I would have told you, you probably could have got in right there and made a lot more money. Great stuff, guys. And Wayne, seriously, you just made my whole week with that. $7,500 week. That's amazing. You guys want to see something cool? What if it was just a fluke? What if it wasn't the average week? 45 weeks because we vacation. That's not so bad. That's not a bad year. Then do it on 10 mirrored accounts. Turn it into 1.7 million. You never have to worry again. Not a day in your life. Cav. No momentum, no clear path down. Nothing that says go up except 2 divergences. Cav, I don't know why you took it. I don't know why. I'm glad it worked. Triggers above blue fib with price moving up from second printed divergence. Okay. So Cav says, with all of my triggers above support, with 2 divergences, I'll let the market start in the direction I think it might go from support. And do you notice that Cav is on the left side of those small triggers? And he takes it right up to trouble from the left side of those small triggers. Do you guys remember the lesson? As long as the market is left of those triggers, it will continue up until it closes on the other side pretty much. So Cav, can I give my whys just because it's Friday and I'm being real mouthy today? I'm flapping gums. Watch this. Whoops, that's too big. You guys are going to dig this. This is how everything goes back to the basics. Are you ready? Price reaches support. All triggers above. What does that say, guys? No shorts, right? Does everybody get that? That's the very basic lesson for termination condition. Price reaches support. Triggers are above. Absolutely no shorts. It doesn't mean there's a long trade in there, new users. But with a little study, with a little repetition, with a little time, watch this. Cav says, 1 divergence from support is telling. A pivot stop out at support is stronger. Small triggers up strong. I'll take a shot at the long since I can't go short. And Cav says he keeps seeing this pattern with the divergences, with the market moving up, with the divergences, with the market moving up. And he says, even though the large chart isn't perfect, the overall read says this market is more likely to go up than down. And he takes a shot. I love everything about the trade, Cav. But there's more to it than triggers above the blue fib, right? There's a lot going on in the background that Cav knows, that Cav identifies, that Cav understands. And guys, this is the challenge. This is when John Novak used to teach the room. John would just say, it's obvious. Because in his head, that one look meant all of this. In Cav's head, this one look means all of this. So sometimes I like to go through and do the chart reads. It doesn't have momentum. It does have a clear path up. And he waits for a more conservative entry to take that trade. I love everything about it, Cav. It is rock star chart reading, and you found a way to capitalize based on your ability reading the charts. All right, Ed. You are, Joel. Late entry. So, termination. You do have momentum starting. The mid-band is nowhere near the triggers, Ed. And then you hit the mid-band here. So, Ed, I like it. You're riding momentum here, brother. You're like, I'm going to take a little momentum. But the second you hit this mid-band, Ed, do you see where the large triggers are? That's your gap theory again. And right there at 90, that's a great spot to get paid. And man, that's 2.5 points. That's a $60 or $70 trade. But the mid-band with the large triggers a full away or a termination condition, I love that you didn't lose anything on it. And Ed, even more, I love that you didn't just arbitrarily put a stop out here. But that's a great target with this look. Does that make sense? Oh, it moves super fast? Yeah, sometimes it just does. I like it, dude. You're riding momentum. You're trading with the trend. You're getting below trouble. That's progress, dude. In a day, that's progress. Nicely done. Bob B. the man says, check it out, Mark. Strong top. Odds favorable. A few ticks below the mid-band. Really big risk on it. But then it goes away quick and right down to the fib. Nice job, Bob B. You kind of got refocused there compared to yesterday. Nicely done. I like it. Well done. Just want to make sure you guys remember that this was just stated. Odds favorable, clear path, perfect entry, easy money. Respectfully, absolute horse shit. Guys, when you beat yourself up, you're going to believe yourself. You can't show me this trade and tell me this. Just saying. That's as far into it as I'm going to go. Guys, the hardest thing you'll ever do is absolutely nothing. The hardest thing you'll ever do is be patient. Oh three. You have all the momentum, but no room to a target here, Ed. And you're out break even. And then you get back in and you're right into a termination condition. And man, I sure hope those one-to-ones break. But that's another termination condition. That's another trade directly into an area that could stop the market. Give yourself room to run. Odds favorable, nothing in the way. It's just easy. It's just easy. That's for everybody. Morgan, Marco's moving quick, so I went for the chili dog. Looking back at the trade, I may not take this again in the future because of the small chart look. What's wrong with your small chart look? You're screaming, brother. You're screaming here. They're riding here. You're good. Ron would tell you that's a great look. When this chart looks like this, in this chart, if they're stacked and racked, dude, it's good. Is it the best? No. That's a great look, though. Great job, Morgan. You went on instinct on that one, and it paid dividends. Have you ever looked at the picture that Ron gave? When Ron posts in the room, when people are struggling with the chili dog, And he has no obligation to teach you guys. Morgan, look at the picture that he gives everybody. Strong trending, strong trending. Dude, that's your look. That's the one that he uses to teach people how to do this. Like when he drops it in the room. Pretty cool, right? You nailed it. Nailed it. Love it. All right, who is this? Hold on. I clicked on it and then I forgot to look. This is... We just did Bob's. Help me out, guys. Ed, is this you? No, this is Trina. This is Miss Trina's. How did I get lost? Totally lost. Joel, Ed. Ed, Jen. There we go, Trina. I may have skipped a whole bunch. I totally skipped a bunch. So let's do this one. Guys, if I missed your picture, let me know. Trina, strong top. Is it really odds favorable momentum, Trina? Let's be honest with ourselves. That's flat, right? Yeah, I wanted it to be 2. Trina, somebody said in this room once, and it's funny, it stuck with me. Flat triggers have no boogie. And I don't know why. That is stuck in my brain. Flat triggers have no boogie. There's no push down when they're closed. You did have the small triggers cranking, which is an advantage. And then when you get in, I dig it. Trying to take advantage of that strong top, smalls down. You get the pull back to the small triggers, and you get paid. And you got paid again. So while I'm going to get you on that one, strong top, strong smalls, everything rolls with odds favorable momentum. Trina, you had a better shot at getting down there than it did go into those large triggers. I think the execution is nice. I just know you're learning, so I wanted to make sure that you saw that that's not the best momentum. Great trade, though. Really good trade. It means that you're thinking in terms of the large chart and just executing on the small, and that's exactly what you want. She moved her stop to the 1-to-1s on her own. The target, love it. Yeah, Wayne, don't you help her on simulator. Force her to mess some stuff up. If every chart's perfect, what am I going to do for her? All right, let's see if we can find the ones I skipped. Ed, we saw that one directly in determination conditions. Paul had a long trade with room to run and made it. He took a long trade and looks like it got him break even after the first target was hit. Then he takes the long trade, same one you took, Joel. He gets paid on it. And then he fights everything. Goes long, and I don't know how that one turned out. I can't see his exit, but maybe he closed the gap back to the large. And he says goals met for the day. Great job, Paul. Ed, it's gone. Why would you have a buy limit down here? Something's not right. All right, Ed, we're having a tech issue. Are you with me in here? Something's not right on your settings. Because I want you to see something. This entry looks beautiful for this look. But the challenge is I don't know where your large triggers are from, because there they are right there. At 03. But here they are all the way up at 06. Something's weird, Ed. Will you do me a favor? Because something's not right. When's the last time you updated software? Has it been a while? I know you've made a lot of changes. Right click and on your 13.2, load in the 13.2 Rinko bar. Okay, load in the 13.2 Rinko bar, and on your 5.1, load in the 5.1 Rinko bar. And I only do this because I want you to see something. If I circle, come here. If I circle the synthetics, the large triggers over here, they should line up with the synthetics over here. So just the picture lets me know something's not right, because this look, you should be looking up here somewhere for that entry. Something's not right. And I don't know exactly what it is. This is 06 to 04, so that's definitely a 5.1 bar. 08 to 06, 3, yeah, that's a 13.2 bar. I'm not sure what it is, Ed. You might even want to let Jason take a look at it and make sure that it's billed correctly. Oh, why do you have 8 range triggers on your 5.1 chart? Because with this look, why the hell would you want it to come to the wrong side of everything to enter? Ed, you're complicating the recipe. This doesn't make sense. I've never taught this pattern in my life. You're using a crutch. And it's the wrong crutch, Ed. You keep it if you want, but you're going to miss stuff all day long. You're giving yourself the wrong information. I mean, just, oh, you're stealing that awesome advantage. Then Morgan, we saw that one. We saw Trina's. And then termination condition. No long trades. You got fibs that aren't showing up over here. Nothing agrees. I like that, Ed. I love this picture. This is the let me do nothing picture because there's nothing to do picture. And then everything says down from a termination condition. Large down, synthetic down, and you went long. How did that work out? Do I have the after picture? Oh, it didn't work. Strong triggers from a termination condition, the market kept going down, and now we're directly into a termination condition, and you're going to look for the long trade. No rules written, no rules written, no rules written. No rules written. Guys, you can do whatever you want. I won't force you to write rules on the chart. But if you're not writing rules on the chart, you're just making life harder on yourself. That's up to you. Better Dad. Watching this area for large to clear. Price tanks here. Large aren't through and large did nothing and had to step away for a minute. So let's use the words. I like the read, Better Dad. I'm going to go Sunday school and read and do it. So do I have a strong bottom? No. Do I have odds favorable momentum? Yes. Do I have a clear path? No. It's 50-50, right? So there's the large chart read. And there's divergence. And watch this. And I love that you didn't take this trade. But this is for the newer people on why we write the whys. Why do I ask you guys to put rules on your chart? It's not for me, guys. I know the rules. From a strong top or bottom? No. Odds favorable 13? Yes. Odds favorable 5-1? No. Divergence on the 5-1? Oh, no divergence on the 5-1? No. Divergence, no trade. And that's awesome. The rules weren't met, Better Dad. Ed, you don't miss 90% of the trades. You miss 95% of your opinions when you take the time to write the rules. Because you're not following the rules on the trades you take. So the rules aren't for the trades you're taking, Ed. They're so when it looks like this, you know to avoid it so you don't have to take a loser. And Better Dad, you did it beautifully. And that's a good one. When it doesn't feel right. Ed, I'm telling you, there has been a proven path for as long as I've been with Nexgen. And I fought this path tooth and nail. 100%. Post in the room and track it. And guys, the posting in the room is fine, right? But if you keep making the same mistakes, go back and look at the pictures. Look at the whys. Ed, why did you feel like you should trade directly in determination conditions, right? So when you look at your rules, Ed, does that fit them? Do you have anything on your rules about termination conditions? This is beautiful, right? But that was a termination condition, and look what it did. And this was a termination condition, and look what it did. So what you're doing is having rules is great. The goal is to follow the rules. And that's why writing them on the chart, it's not for me. And I know exactly what your charts say. Hell, I even recognized that when you said you didn't swap the templates, you did swap the templates. Because I've been doing this for a long time. That recognition is there. That's what I want you guys to get. I want you guys to get to the point that every time you see this look, you can't wait to take an entry. And every time you see this look, you can't wait to sit on your hands and do nothing because you know your advantage is gone. And that's the whole point of everything that we do here. No, they weren't. Ed. Hold on. Did they break through divergence? Did they break? That's it. That's the only question you have to ask yourself. You say they're breaking, right? Those are breaking through. Weren't those breaking through as well? What's the difference? This one had better momentum. That's okay. There's your picture. When you make predictions, things rarely don't. They don't work out, guys. Let it be patterns. Let it be advantages. Instead of they are breaking, change the language to they broke. Does that make sense? I almost had a clear path. I almost had a clear path, but it didn't go. I almost had momentum, but it wasn't. I almost had a clear path, but it isn't. It almost broke, but it didn't. I had all that momentum. It was breaking, but it didn't. Does that make sense, guys? I'm getting preachy. I know I'm getting preachy. I am in the pulpit. There is such a difference between it has and it should or it is. Guys, there is no it is. It is breaking is a prediction. It has broken is a chart read. Does that make sense? Jeffrey Dean says, oh yeah, just like the Kool-Aid Man or Randy Macho Man Savage. Love me some Randy Macho Man. Whoops, wrong one. So, guys, I mean, that's a great lesson as we go into the weekend, as you gear up for next year. There's such a big difference between it could and it has. It should and it has. It might and it has. One of them is very definitive, right? I take my wife on a date, we have dinner, go to a movie. I can't brag about kissing her at the doorstep until I do, until it's happened, right? I'm not going to call people and go, man, in 20 minutes, I definitely got kissed. No, the potential's there, but until it happens, sad lips, guys, sad lips. A plane could crash through my ceiling right now and kill me. But until it happens, I'm not making decisions based on that possibility. I could walk in my front yard, get bit by a rattlesnake, and die right there on the spot. But until it happens, I'm not getting anti-venom. All right, Miss Trina. Strong bottom. Thank you. I work out. Odds favorable. Absolutely. Potential to break right here at 20. Potential to break. Oh, we're going here. Clear path. Odds favorable. Clear path. Strong bottom. Perfect entry. Great stop. Got the reversal bar. Oh, and they got you. Trina, once again, perfect pattern. Perfect recipe for success. Didn't work. It just didn't. It's a great loss. And Trina, this is what happens when you jump off a playback and go live. They're going to test your trust in the methodology. The market is going to see if you have conviction, to see if you really believe in this pattern. This page should tell you the pattern works, and that's why I'm not worried about you not taking the next one. That it's going to test you once you go live? It's so true. I mean, obviously there's not somebody, we may or may not have installed cameras in everybody's houses, but this is what happens. And boy, you want to see if you really trust your plan? Take 2 losers in a row at the beginning of the day. And then when it sets up perfect the 3rd time, if you take it, you know you trust your plan. If you start changing your rules on the spot because 2 trades didn't work, you haven't done the study you need to fully trust your plan. Ask me how I know. Because I've lived it. I have lived it. Being calm, waiting, and maintaining the calm in the trade feels so good. It does. It sure takes a while to get there, though, doesn't it, Wayne? It takes a while to get there. It takes a while to be able to sit still and let the trade do what the trade's going to do. And I'm telling you, once you learn how to do that, it's pretty awesome. Have you guys seen this? You always ask for updates. You guys know what that is? With divergence and fibs and dynamic Renko bars. Hey Cav, great trading, man. Great trading. Thank you for being here and still posting. I know you don't need it, and I love that you are. Everything but triggers, Morgan. Guys, this is the browser version. This is the Nexgen browser version. Things are moving at a pace where the goal and the hope. No, better dad. This is what my brother has spent the better part of the last year and $1 million on. This is the browser version. This is, you can open this up on your laptop, go sit on the beach and make money. It's everything that you guys know. It's fibs, it's Renko bars, it's mid bands, it's one-to-ones. And this is never having to use NinjaTrader again. Guys, this is exciting. My brother has worked so hard to get there, and we are so close. I can't wait. Once it goes, I'll stop teaching this room on NinjaTrader. Absolutely. So Trader or Better Dad, it's Friday. Let me give you guys a little heads up. And there's a lot of people beta testing right now. Here's the funding website. And when you log in, you can, Nanda. I use whatever this one is. I think that's Chrome. So check it out. There's my trading accounts for the funding company. If I need to buy evaluation accounts. And then this is the one. This is the trade copier. So I have 2 accounts. I've got 1 leader, 1 follower. If I have more accounts, I can follow those as well. I'm using this one with TradingView right now. Because obviously the browser's not there yet. So I've got, whoops. In TradingView, my brother has created one-to-ones. He's created mid-bands, trigger lines, divergences. We couldn't get fibs in here, and we couldn't get dynamic Renko bars in here. So this is actually a 15-minute chart and a 1-minute chart. The 1-minute chart even has market flow, which is pretty cool. And then there's my Nexgen funding account. There's my other accounts. And we did some testing, so I've got some losses in there. But pretty cool, right? This is where we're headed, guys. And the awesome thing is the funding company is going to have, yeah, Better Dad. That's why we're doing it on our own. The whole goal of the company is going to be the same goal that it's been for the last 28 years, teaching people to day trade. Guys, we want you to be successful. We want you to get in. We want you to make money. We want you to make money consistently. Because, Nanda, if you come in and you are consistently trading a plan and making $1,000 a day, you sign a piece of paper that says, I can mirror your account. So we're going to take your trades. That's the goal. We want the best of the best traders. We want the people that are making $7,500 a week. I'll mirror it on 100 lot. So that's the idea behind the funding company, guys. And we're going to have that same approach. That let's figure out what it's going to take to get you successful. Let's work together to make it happen. Let's get it so you don't have to trade your own money. And guys, if I'm not mistaken, go back to this one. Look at the profit split. 100% up to 12.5. Guys, after your 16th payout, you keep it all. There's no more split. Once you hit your 16th payout, guys, it's your money forever. And payouts are every 8 days. If you're consistent, you might never have to put your own 401 into your trading account. Just do it well. Trade Nexgen's money. Pretty cool, right? I've never seen anybody do that. Pretty awesome. So I'm excited. We are hopeful in the next 15 days or so we're going to actually go live. If you are familiar with TradingView, like Better Dad, John's put a call out there for beta testers. If you want to go play on the funding account and buy fictitious accounts with a fake credit card and run the copier and take trades and help him identify any challenges so we can go live faster, guys, he's put that out there for you, which is pretty cool, I think. It's been a lot of fun to be a part of this. John Novak and I have done a tremendous amount of work on TradingView to create a plan so that if you guys do like TradingView, let me go to our site. There is actually, on the resources page, no, there's not. Well, heck, maybe it's under Trading Guide. I don't know. Well, there was something where you can go in and you can actually get, maybe it's under pricing. You can get the TradingView accounts. You can download the TradingView workspaces, all that good stuff. You can get that super close stuff that John Novak wrote. Pretty awesome. Steve, odds favorable and clear path. You get in above the large that are down. You're like, man, I want to be on the good side of stuff. And you get paid $275. Nice job. Could have done the trend trade. Might have got you behind the reversal bar. I think that was the one right there, though. No divergence was the perfect trade. And Steve, great job capitalizing right in the middle, right up to trouble. I love that phrase. Out at trouble. Nexgen gives me the ability to understand where the market is likely to go. Let me get paid there. I know, I love the no divergence one too. But Nexgen gives me the ability to understand where the market is likely to go. Let's get paid there. Steve Diego, you do it great. Nicely done. Did you guys learn anything this week? I feel like this week took a step up. I feel like this week was a little better than the previous and maybe better than the one before. I have more people coming in and posting. I've got more people forcing me to look at their charts, to give them feedback, to talk about what they're doing, how to do it better. And man, I'm watching progress. I love it, guys. For me as an educator, as somebody that loves to teach, that's passionate about teaching, to see you guys continuously moving forward, and even more so, moving forward with simplicity, not needing all the trades, waiting for the best trades, I'm pretty stoked. You're staying up till 10 p.m.? Where are you at, Alexandro? I'm assuming you're Europe, because it's only 10:45 a.m. here. Oh no, what are you going to do till 10 p.m.? You're in Boston, probably drink, right? That's what people do in Boston. Woo, Joel, that's no fun. Boston, you go to Dunkin' Donuts. You look for your khakis. And you don't know if it's your car keys or your pants. Soccer at 10, right on. I love it. Mark, you've continually reload all historical data on NASDAQ triggers. Get that wonky look. Anyone else having that one? Steve, you may just want to start fresh, rebuild. 100%. I did it yesterday morning because I was having challenges. But Steve, even more importantly, go to Jason. Guys, I will always help you in any capacity that I'm able. But I'm telling you, this guy, Jason, he's freaking amazing. He'll find things that are wrong and teach you how to fix them, and you'll be good. Ed, you can be taught. You haven't gotten sick of losing yet. You can't let your desire to win override your desire to follow rules. That's the only challenge. Ed, you can read charts, but you change them. You optimize things. You think you optimize things that didn't even need optimization. You took a plan that's been tested and proven. Just follow it. Just try to follow it. That's all. I'm begging you. On bended knee. Give me 5 days on the KISS plan. Or Ed, if you don't have big plans this weekend, do me a favor. Take 1 day on market replay. Hit pause and make sure these rules are met. And I want you to see the potential. I want you to see the potential of following rules, because that's what you need. You need that light on aha moment. You need to go do market replay, to hit pause, and this is your management plan when you do it. 100%. Tell me how it turns out for you. The problem is most people don't want to sit still that long. Most people want to trade into a termination condition, get run over, pissed off, and decide to go short, and then get run over and get pissed off. There's an easier way to do it, ladies and gentlemen. There really is. Ed, you're a freaking amazing chart reader, brother. You are. You got to trust the plan. All right, guys, this is how we'll finish today. So, Alessandro, I'm going to do 2 things. I'm going to give you the instructions. I'm going to teach you to fish. And then, here's what we're going to do. Let me find the instructions real quick. Market replay routine. So I'm going to give you this. But let's open it up together as a group. So first thing I have to do is I'm going to shut down my workspaces. Close the workspaces, all good. And then guys, I need to kill my connection. I can't be connected to a live account. So I'm going to disconnect. And then I'm going to go back to connections and I'm going to hit playback. And what it's going to do is it's going to say, all right, what do you want to trade? I want to trade crude oil. Well, what day do you want to trade? I want to go back to Monday, because Monday I think I made a few mistakes. I want to correct those mistakes. I want to work on my management plan. I want to learn to trust the rules. So I'm going to click download. When I click download, doesn't even matter to me, Wayne. Now it's done downloading. I'm going to hit continue, and it's going to give me the old Sony Walkman here. It's going to give me, 310 to 310. Something didn't work, so let me disconnect. Let me reconnect. Yeah, it should, Ed. So I'm going to do crude. We'll just do the 12th. I'm going to download it. Oh, you know what? Are we in 425 yet on crude? Yeah, we are. I'm going to hit continue. There it is. So I've got the 12th. Oops. To the 12th. So once you get your date, you're going to make sure that the dates match up here. You're going to go 312 to 312. Make sure these match, guys. This is an important part. If they don't, your computer is going to choke. And then I'm going to go to workspaces and I'm going to open up crude oil. And it's going to load me into midnight on the 12th. And there we go. I've got weak triggers, but a clear path. I'm going to make sure that I have my ATM strategy. And here's what I want you guys to do though, is you can turn that up 15 times, hit play. I don't have momentum, so I'm not taking the trade. And then have your KISS plan in front of you. Make sure you have your rules in front of you. And let's just say hypothetically the market's cranking around and I'm thinking, man, it's time to take a trade. Pause. Hit the pause button. Open up your rules and say, let me see. Whoops, that's not my rules. Open up your rules from the KISS plan and say, all right, do I actually have strong triggers? Dang it, I don't. And my areas are on the wrong side of the triggers, and you say, okay, no trade. And then you hit play again. And you wait for the next setup. And you can crank this all the way up to like 1,000 times speed if you want. Look at that. Without momentum, it lost. Wait, I think I have a trade. There's momentum. Crap, not a clear path. Okay, don't have a trade yet. Let me hit play. Look what that termination condition did. You're also learning to trust termination conditions. Do you see it? No, but Ed, here's the deal. How many times do you need to see that happen with odds favorable momentum before you believe it? How many times do you have to see it not win with weak triggers before you believe it? That's what this is doing. There is no pause in real time. Car hit the wall 100%. Alessandro, price reached the area. The triggers couldn't even get there. That's even stronger. Price gets there, decisions are made. Triggers tell the story. Does that make sense? Triggers don't have to get there. Price reaches, where are my triggers? So if you know that recipe, you know not to trade. So Alessandro, check it out. Price reaches, triggers below. All that says is don't go long yet. It doesn't mean that one isn't coming. It just means not yet. Now I've got odds favorable. Now I've got a clear path. Now I've got areas inside of triggers. This actually fits my plan. Let me slow it down and hit play. Let's see what happens. I've got my ATM in. I've got my rules met. I've got areas inside of triggers. I don't know if it's going to give me an entry or not. I don't have to be that patient. I can crank it up to 50 times. I can crank it to 100 times. I'm just going to let it play out. There's my entry. Stop. Well, the stop wasn't in the right place. I didn't take time to put the stop in the right place. That was one tick below triggers. Should have been 4 to 5. This would have been an easy winner. I screwed that one up, guys. Sorry, I had it going too fast. You guys see how the stop's not in the right spot and it went 2 ticks below it and then ran? That's why we have a plan. So go through and do this. And guys, this isn't real money. What this is this is an actual market that happened, that went that way. Look at the patterns. Go back and study them. Because when you believe in them, you're less likely to break your rules. That's what it's for, Ed. You don't need a pause button. You just need to practice and see that it does in fact work, and see that termination conditions do stop the market, and see that weak triggers don't push it forward, and see that terminations do stop the market, and see that terminations, it doesn't push forward. I mean, over and over, there's a million lessons without taking a trade. How many times do you have to see a termination condition work before you stop trading into termination conditions? I'm still looking for the number, but I do it less. So good stuff. The instructions are there. That's how you do it. Remember to make the dates match. That's a big part of it. And then just disconnect and close your workspace. Pretty cool. All right, I'm going to end the broadcast and I'm going to get